Here we are joined by Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. Thanks so much for making time today.
Hey, thanks for having me.
So it's a busy after hours today. Well, it probably will be for the next few weeks at least. We're talking about Microsoft, and we're seeing shares in after hours trading go higher. Microsoft has been in the news quite a bit recently with its layoffs that it announced, 10,000 jobs cut, and then that investment in OpenAI. The results today looking like there's strength coming from the cloud business. I wonder just, overall what your thoughts are on Microsoft and the strength that we've been seeing in the tech sector to kick off 2023.
Well, yeah, we've seen the tech companies make the adjustments, some of them making the adjustments they need with their staffing and their businesses. But with Microsoft, they've really actually been aggressive with their current acquisition of Activision still, kind of going through. And now this big investment in OpenAI, which is really a huge opportunity for Microsoft. But they've really, management is so good there, and they've just been executing on all areas because some of the areas of their business has been under pressure, like the PC business, but they've been making up for it with a wonderful cloud business, and other areas of their business have been very strong. So it's one of my top holdings in my fund GK, and we're very pleased with Microsoft.
Now, you've also got your eye on Tesla, which we will as well,
right,
because it's reporting tomorrow. What do you make of Tesla right now?
Well, it's an interesting quarter because at the end of the quarter, we kind of ran into the wall with the China COVID and some of the discounts that Tesla did at the end of the quarter. But they did deliver a record amount of cars, and I don't think they had to give up much margin to do that this quarter. So we're expecting a decent quarter out of Tesla. I think it's more an issue of Q1, what that's going to look like with much lower prices, much higher volumes. What will the margins be in Q1? So there's a lot of uncertainty around Tesla's earnings, and I think we'll get some clarity tomorrow. But I think ultimately we're going to have to wait a few more months to see what happens with where Tesla's going earnings-wise.
And what about, some clarity perhaps on the focus of Elon Musk?
Well, I don't know if we're going to get that so easily, but I think Elon is working hard. I mean, there was a rumor yesterday Mr. Beast might be CEO of Twitter. So hopefully he's working hard to get a CEO of Twitter and refocus on Tesla just in time to get this Cybertruck launched. But we had a great announcement today of the semi-factory in Nevada, and I'm very excited for the truck business in Tesla. And so investors, even though, Elon throws some curveballs, you got to keep your eye on the ball because Tesla might be another one to hit out of the park again. Now,
another company on your radar right now is Disney, and it's one that we've talked about quite a bit recently with Bob Iger coming back and taking over for Bob Chapek. What is it that you like about Disney right now?
Well, mostly it's based around travel and entertainment, which has really been a booming business in general. But now with China opening up and the Chinese tourism really just beginning, not only had Disney much struggles in Hong Kong and Shanghai at their parks there, but also Disneyland here in the United States, Orlando and in Anaheim, we just have so many Chinese tourists. So the opening of China is a wildly bullish thing for Disney, not to mention the theaters are open in China now, and some Disney movies were just approved for release in China, which is a massive market. And so with the theaters open in the post-COVID era, and now with Iger back, which was really the big thing for me to really push me over the edge. I was not a Bob Chapek fan, and I'm a huge Iger fan. So Disney is a great opportunity. Hasn't gone anywhere in 8 years. The stock is due.